Hey traders, Raghee here, and in this update we're going to dive right into it. What is the question that has been on so many traders and frankly investors' mind? Flush or fly? What is the plan for the year end? Now, while none of us can fortune tell how this year is going to end, we can look at the probabilities, we can look at the trends, and we can separate what could be individual sectors and stocks that are likely to benefit from year-end window dressing from this expectation of a broad-based rally. So let's first of all keep in mind that we're not talking about a broad-based rally here, even though I'm going to dive into the indices. By diving into the indices, that does allow us then to look at the individual sectors within them. And that's something that's going to make a whole lot more sense as we get closer and closer to Wednesday's hot zone with Jerome Powell. Here we go. And the FOMC. So we've got the economic projections, we've got the statement, and then we've got, bam, Powell right there, 2:30 p.m. on Wednesday. So it's tough to want to do a lot of heavy positioning in front of that event, but we can think about what some of the opportunities will be, not only as we go into Wednesday the 15th, but beyond that. All right, so here's how I break this down. Let's start off with the S&P. S&P does not have a uptrend right now. It's chop, but the structure that preceded the chop was bullish. And so there's more likelihood that we're going to continue higher than not. Now, because this is chop, I do want to mention that this area here is resistance. Previous Darvis, previous Darvis. So if this is setting up for a quick move to the downside, great, because if that syncs up with the FOMC, that's going to be a buy the dip opportunity. When it comes to the NASDAQ, I'm not as keen on the trend. However, I do not want to neglect the 55 exponential in here as a potential opportunity. Don't expect it to stop there, but do expect there to be some resilience. What would be better than going with the NASDAQ futures would be likely looking for weakness in the XLK. This is where we can choose a relative outperforming sector in lieu of the broader index and be a little bit more specific about a corner of the NASDAQ, led mostly by Apple and secondarily by Microsoft, to keep the overall trend and the XLK moving higher. So XLK is definitely on the list, as is XLY. But once again, we're going to be looking at scaling in, quite frankly, between two support areas as potentially an oversold fade buy. I'm not shorting XLY, I just don't like it as much as XLK. So in this case, I may not be as interested in the index as I am those two sectors. The Dow is probably the one that I like the least of the big three. The Dow is the one that's choppy, and the Dow's the one that just finished bouncing off the 200. I don't know that we'll see that again before the end of the year. But one thing we can do is take a look at this low, and if this high holds as a minor high, so that means we do not exceed the high of today's candle, and we can actually trade lower from here, I would consider a retracement entry, presuming we do not take out the high of this particular, again, 13th December candle. And I would look at the point of control, maybe even down to the 50%, around 35,000, because that would be a great psychological level too. If we can retest 35,000, we've got a nice volume weighted average price sitting there, but more so than that, to 50% of the last major move, it's also a nice halfway point in that range. So notice that, yes, I could dive into XLI, same 50% approach. It's XLF that's probably the most perplexing. And the reason I say that is because if we're looking at higher rates going forward, XLF and KRE should benefit. They're not. Right now, XLF is a relative outperformer, likely being helped by some of the strength overall in the S&P. But it's this area here that I'm very interested in terms of the range that we're stuck in. And if we're going to find a range between this Darvas level here and the volume weighted average price here, we could be setting up a pretty decent buying opportunity as long as we stay above roughly 37.5. So it's going to be really important to stay above this. As we sink into this area, there is an opportunity, I believe, to get long. I don't want to be short the XLF. You know, we see the red here at the top row, but this is chop. Look at the bottom row. That's yellow. So we have a bullish directional bias. But this is where we start to dive into a little bit more detail, and this is something we'll dive into more in terms of, are there corners of the XLF that will be better traded at the boat level, not the tide of the S&P necessarily, not the tide of the XLF, but at the boat level with things like CME, maybe Schwab, but definitely CME. That's a gorgeous uptrend and very much a buy the dip opportunity within XLF. This is the way that we can find opportunities. I say this is the way, and I think immediately of the Mandalorian. We are Trendalorians. There's no doubt about it. So think about the trends that are likely to continue into year end. All right? Focus on those. Don't go bottom picking in this environment, and I'll see you all in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.